The visual information provided in each candlestick formation allows a much more accurate assessment of a trend analysis. For example, we had a big selling day Tuesday that would have told us that this is going to be a reversal. We had a hanging man doji followed by bearish confirmation with a close below the T line and a possible double top. However, the last criteria was that it needed to break this downtrend or uptrending channel, which yesterday's trading told us they weren't, and today's trading in the Dow told us that even after they took it down, they brought it right back up to the T line, making the uptrend still the viable analysis, and would even be more so if they open this market positive tomorrow. The lack of selling pressure was even more compelling in the NASDAQ, where the NASDAQ had a reversal, but it didn't close below the T line. Yesterday, we had a bullish engulfing signal, telling us pretty much that they weren't selling this off, that the bulls were still in control, and then even after today's sell-off, they closed the NASDAQ right back up on the highs. Also telling us that they weren't closing below the T line, and we have a very simple premise in our analysis, that as long as they can't close below the T line after a candlestick sell signal, the uptrend has to be considered still in progress, which allows candlestick investors to take advantage of very strong price patterns. One of our best signals is what we call the best friend, a doji type day with a gap up, especially through a resistance level. This tells us that there's great enthusiasm to be back in this trade, which is exactly where we want to be, is where we see a buy signal and enthusiasm to be in that trade. They open it positive today. Look for a doji sandwich, a very common pattern that would tell us that this price trend is going to probably take us all the way up to the $12 area. Our recommendation today on ZU was also based on that same premise. Notice how it does the typical. Price movement came out of a fry pan bottom, resisted at the 50, pulled back as a cup and handle, stayed right near the T line. Now we had a doji gap up through the resistance level again, telling us we have more upside. Even though it opened positive and backed off today, it wouldn't be unusual to see this open positive again and trade higher, doing a trend kicker type signal. These are all patterns that have occurred in investor sentiment for centuries, and allows the candlestick investor to take advantage of not only the positive price moves, but the most powerful positive price moves when the market is in an uptrend. That'll be it. We'll see you in the chat rooms.